Oh, we are not done yet. No. We got one more day left. We got some more winning trades to find. Hope you guys had a fantastic day. Hope you made some money out there today. But I'll tell you, a pretty darn good day today in our morning trade room, but it's back to work tonight. We got Friday coming right around the corner. Tomorrow is not your average Friday, right? End of the week, end of the month, end of the quarter, holiday weekend coming up. And I'll tell you, when you see tonight's charts, we have a bunch of great reversal opportunities I'm tracking for a finally Friday session. And you know how we do it on these videos. I'm going to cover all my favorite trades on the video tonight that we have a game plan to make some money tomorrow. Before we jump in though and get the party going tonight, before we get started, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoy this stuff, as always, thank you so much for tuning in. If you like the videos, hit that like button for me and give me a shout out, give me a holler down in the comment section below. Thank you so much for tuning in. I know it's a holiday weekend. I appreciate you guys sticking around here. We got more work to do here this week. Where are the best trades setting up for what should be another fantastic day tomorrow? Reversals, a lot of reversal opportunities here on the charts right now. We got a bunch of ranges in front of us here today. You know ranges, right? Ranges act like magnets. We get some breakouts. Bull breakouts going higher on the Nasdaq. Reversals off the high. I got some beautiful reversals tracking off the low as well. So I'll tell you, the markets are pretty neutral overall right now. So we got both long side and short side trades we're going to cover on the video here tonight. You're going to love this lesson here on the YouTube channel. Before we jump in though, and talk about my favorite trades for tomorrow, let's quickly talk about the schedule for tomorrow, because there's a lot going into tomorrow. There are 4, maybe 5 things I want you to be aware of here. First of all, we are expecting to hear from China and Japan overnight. China has their PMI numbers coming out overnight. Tokyo has their CPI numbers coming out. That's definitely something that may shake the markets up overnight. So if you're trading overnight, be aware of that from China and Japan. Tomorrow, really arguably the biggest news of the week this week, you could easily say, besides that Powell speech on Wednesday, is that personal income number at 8:30 Eastern time. We've also got the Chicago PMI number at 9:45 a.m. Remember, we love to trade that 10 o'clock to 11 o'clock block of time in our morning trade room, and that Chicago PMI number might be exactly what we need. Those are 2 catalysts that we know about here for tomorrow. The third thing is, tomorrow's a Friday. My mindset on a Friday, see, Fridays usually get a bit lower volume. Fridays like to run in the afternoons. So my mindset, my goal on a Friday is to get into trades as early as I can and then try to leave a little piece of the position open, right? Because we know that Fridays get illiquid, they get low volume, and so we definitely expect this weekend to be almost like a holiday weekend, right? It technically really isn't, but I would imagine the window of opportunity tomorrow could be a bit smaller. So it's early in and try to leave a little piece, because hopefully we can get lucky and catch a nice big runner into lunch, into Friday afternoon. So that's my mindset here for tomorrow. And also, last thing too, there'll be no video newsletters next week with that holiday on Tuesday. Monday's going to be kind of off. Wednesday will be a bit of an issue. We'll take the week off next week. We'll rest up, get refocused, and we'll come back that Monday, July the 10th. If you're traveling over the holiday weekend or holiday next week, be safe out there. I will miss you guys. We'll come back that second week in the month of July. All right, guys? So be aware of overnight news in Asia, China, and Tokyo. Be aware of the news tomorrow morning, 8:30, 9:45. Get into stuff early, but leave that piece to run in the afternoons. Maybe we'll get lucky into the holiday weekend. And again, we'll be off next week. All right, back to our charts though. The money is made on the charts. We all know that, right? And speaking of money, if you like making money, make sure you watch all the way to the end of this video, because every trade I talk about tonight on the S&P and SPY, Nasdaq and the QQQs, they can all be applied to your favorite market. So let's jump right in. S&P and SPY first. We'll wrap it up with the Nasdaq and the QQQs. The S&P and the Nasdaq are very different here tonight. So it's going to be kind of a master class of different ways to trade. What have been some great markets for us lately in our trade room. First of all, tick charts. Okay, you'll notice upper left-hand corner, all of these charts are tick charts here tonight. And you can see this yellow line right there. That is the 21 EMA. Just so you know what you're looking at. if you're watching here for the first time right now, what's the most important factor on this S&P chart right now? Well, as you can see, we are a range-bound market. We've got the bears failing their rotation, which definitely tells us the buyers are trying to break out and go higher here right now. Now, that's a good start, but let's take a step back. Let's look at the 60-minute chart here. The 60-minute chart will give us a little bit more clarity as far as how to strategize or structure the best trades here for tomorrow. Right now on the 60-minute, the key things you want to understand is that we had a big, strong pop-up in the middle of June, and we've basically been waiting for this thing to pull back and try to retest that high. So buyers ultimately are trying to, and they are slowly shifting, right? We're slowly seeing that momentum start to shift now for the buyers. And we assume the buyers are trying to run this thing back up into that trading range. Now, if you watched last night's video, I talked about last night how we're not quite bullish just yet, right? We're slowly shifting our way to the buy side right now. There are really two scenarios that you want to be kind of anticipating here at this point. One would be, and we talked about this last night, one would be kind of a squeeze and run higher, right? And of course, if we do squeeze and run higher, we'll be looking for what we call bear traps. Tomorrow morning, you guys are learning about traps inside the free trading course. But one scenario right now would be the bears start to walk away, we start to squeeze and run higher, right? That's one scenario I got to be ready for. And if we see something like that, what I'll do is I'll start looking for, nice tight channels, and we'll start looking to be a buyer on bear traps. We'll talk more about this here, of course, in a moment, all right? The second scenario you have to kind of think about as well is that we really haven't seen that jump yet. And so we may continue to see what we saw today, right? Which was every time we went up, the bears knock it back, right? We saw some great reversals off the high this morning in the trade room. So we may still be in store for some more shots going lower, and we'll be looking to buy those ultimately off support levels down below. So those are the two situations we're watching, right? Momentum is shifting now towards these buyers, at least it feels like it is, unless we see something crazy happen overnight in Asia. We had that PMI number coming out of China. But if all things are equal for tomorrow, right, the goal of this is either to get this thing squeezing and look for some bear traps on the way up, or get those shots going lower and try to buy those dips as we make our roll back up here, right? That's the general idea here, the big picture vision on the S&P 500. Now, let's go back to our chart right now, and now let's kind of go over, knowing what we know on the 60-minute time frame. Now let's talk about really if we go higher, if we go lower, and kind of game plan these. Now, remember, nobody really knows what's going to happen tomorrow. So it's my strategy always is to game plan, go over different scenarios. That way, no matter what we get tomorrow, we have a strategy to make money, right? It doesn't make any sense to predict where the market will go because who knows if that's going to happen, right? Okay, anyways. So ultimately, again, we want to plan for that squeeze, right, going higher, and we want to plan for those shots, okay, going lower. So it's relatively easy if we go higher, all right? If we go higher, like I mentioned before, we're looking for bear traps, okay? And you will know this. It'll start to accelerate, right? It'll begin to separate off the moving average. So if we begin to accelerate and run higher, you guys are learning these in the free trading course, right? On the way up, we're going to be looking for, these are called bear traps, okay? It's a strong move up. It's a shallow pullback, barely pull back with moving average. It's a higher high in price and a trap below that low. These are called bear traps, right? Okay, so on the way up, it's bear traps. Now, after we get high up now we don't want to be buying high anymore, right? I don't want to buy high. I want to buy low. So in these situations, what we'll do is we'll start looking for larger channels, right? Larger channels, and start looking for what I would call a breakout pullback, right? This area right there, that area right there can be seen as major support. But ultimately, what I'm going to do is once we start getting way, way high up, I don't want to buy high anymore. I want to wait for that deep pullback. And these will almost always turn into that classic failure pattern below the moving average into a pullback combination that I talk about a lot in the free trading course, right? It's part of the price action cycle. Okay, so think about this scenario. It'll be something like this. If we end up squeezing, right, and running higher, it'll be that bear trap. And then as we go higher, don't buy high, wait for the pullback, get underneath the moving average, okay? Find those larger channels, and we'll trap the bears with moving average, use their stops with a failure pattern, and then again, use a pullback setup that almost always comes together with a failure into pullback combination like we saw right there, right? I go over all of this again. I go over all these setups inside the free trading course. If you haven't taken the free classes yet and learned all these entry tactics, what I'll do is I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that short video series will teach you a stupidly simple trick that we use in our trade room to know exactly where the best winning trades are going to be each day. And I'll teach you my 4 favorite entry patterns to help you start making money each day. If you're tired of missing the best trades right now, if you're taking too many losses, grab the little link that popped up there. Take that free course. There are literally hundreds of examples of exactly what I talked about, which of course is on the way up, right? It starts screaming, going higher. It's that bear trap. And then again, going out and finding larger channels, thinking about where these prior support levels are, waiting for that pullback, getting underneath the moving average. That's where failures live, failures into pullback combinations, and up from there. So I like that little dance, right? Trap, failure, pullback, okay, as we go here. All right, now, and don't forget, I'm going to put all the important links tonight. So if you can't get that pop-up, I'll put all the important links down in the description of the YouTube video. Okay, now, let's talk about if we go lower. All right, because obviously we have an idea of what to do if it squeezes. But again, like I mentioned before on the 60-minute, we may get some shots, right? We may get some shots. We're not quite there just yet, right? We haven't jumped off that moving average just yet, right? So this may not be as easy for the buyers as they would like it to be. So on the way lower, right? On the way lower, first of all, how would I short this thing off the high? Well, what's the problem? The problem is momentum. Well, there's actually 2 problems in this chart. Okay, the problem is momentum and this trend line, right? That trend line, that's a tough one. Okay, so what you want to do is you want to use a crown reversal. Okay, you want to go up, you want to pull back, let the buyers try a couple times, and look for a bull trap, right? Like that, right there. Okay, that is the pattern I'll be looking for over here to sell short. And the reason why you need that pattern is because, one, we're very bullish overall. So we have to give, well, not overall, but in the short term, right? We're pretty much neutral, as you can see here, overall. But right now, we're pretty bullish, right, in the short term, right? The bears kept trying to sell off the high, and the buyers kept on gobbling it up, right? So we're shifting towards the buy side. So because we have to give the buyers the benefit of the doubt right now, we have to let them try a couple times to punch this thing higher, right? I'm not in the business of picking tops, okay? Not in a market like this. So let them try a couple times. And then remember, because we have that support trend line right there, okay, I don't want to sell low. I have to sell as high as I can. And one thing you learn a lot about in that free trading course is that traps are the best entry if you're trying to short this thing off the high, right? So traps are the best entry to short off the high. Now, look at this pattern setup again. Okay, we pull back, buyers try once, we go lower, buyers try twice, and we get that trap high. Remember, you want that trap signal to be closing firmly below the 21 moving average. We talk about this in the free trading course. Okay, so that's the way you short this thing off the high. Where do you think the market wants to go if we do get that short? It'll want to go back to the other side of the trading range, and it will want to pendulum swing or rotate back down to, if it was me, I put that target right at that low, right down around that low. All right, that's how we sell it off the high. Now, once we get that short, if we get that short off the high, can I buy off that trend line? I definitely can, right? Can I buy off the low of this trading range? I certainly can. What are the challenges though for this? This is actually a really, really good chart to learn off of here tonight. So let's see. If I come in, if we get that crown reversal off the high, right, like I'd love to get, and we end up coming in down around that trend line, okay? What's the problem here? Okay, the problem is not momentum. Momentum looks pretty good, right? Momentum is pretty bullish in the short term, trend line as support. So I like the idea of buying off that low, but are you seeing what I'm seeing? All of that resistance. So I like the idea of being a buyer here, but I'm a little bit worried I'm be buying right into these highs. Now, we just talked about this. What's the one entry pattern that would allow me to buy as low as I can? In this case, it's a bear trap, right? It's a bear trap. Now, watch how this looks. As we pull back, let those bears get short. Let them go higher and look for that trap right below that low. Okay, we have a saying in our trade room: shallow pullbacks need traps. Shallow pullbacks need traps. Why? Because you don't want to buy high up here because you're buying right into that overhead resistance. This will make a lot more sense if you're taking that free trading course, right? So again, I want to see bears try once, and really the only reason why we need 2 tries here is because we need to get some trap pattern, right? Take some profit off at the retest of the high, and then try to leave a runner up around these key areas of resistance up overhead, okay? Now, what if we end up rolling all the way back down? Or maybe we end up taking out this low right there. Maybe we end up here, right? Or we end up down here, okay? We now have a lot more flexibility. We're not as worried now about buying too high, right? So if we roll over and take out that low, for example, right? They love to take those range lows out. At this point now we're not so worried anymore, right? Now, if we see a relatively deep pullback, we know that deep pullbacks mean momentum will shift for the bears, right? So like, for example, when I see a real deep pullback, a sharp pullback like that, right? The bears are going to come in and they're going to try to run this thing lower because that momentum is so strong. So in those situations, what you do is you wait for the bears to try once, you wait for them to try twice, and then you think about where are their stops, right? And you look to buy into those stop losses. So same thing goes over here. If we run lower, right, get a nice low price, the problem is, remember, there's no free lunch in trading. There's no free lunch, all right? We're either dealing with overhead resistance or we're dealing with momentum. Okay, so in this case, if we get that deep pullback, I'm no longer worried about the risk reward ratio like I was on a shallow pullback where I need a trap, right? A shallow pullback is nice momentum, but the risk reward ratio is not that good. I have to buy as low as I can. If we really pull back, now we have to worry about momentum. Long story short, it's a similar setup pattern. Right? In this case, if they pull back really deep like this, we have to assume the bears are going to try to complete that rotation off the high, like I mentioned earlier. So give them the benefit of the doubt. Let them try a couple times. And once they get short, once they wrap that noose around their neck, now they can go out, think about where their stops are. Or as I always teach my students, my first mentor always said, think about where their pain is. Right? Think about a scenario where the sellers are in a lot of pain and literally buy right into those stops. Okay? These oftentimes, by the way, will oftentimes turn into a failure into pullback combination, right? Where it'll trap below the low, we bind stops, and then we can grab another one there on the pullback off the moving average, failure into pullback combination. We oftentimes see stuff like this too, where it'll rip and run higher, and you'll get this beautiful trap setup like that, right? These oftentimes, when they squeeze the bears out, when the bears are trapped and their stops get run, that squeeze that runs higher there, it can really rip. And of course, you don't want to buy high. You want to buy as low as you can because we still have that overhead resistance up intact, and that's where a bear trap will come in. Right? So think about this pattern here. And again, it could be here, it could be here. If we end up all the way down at those lows, right, it's a very similar situation. It's simply waiting for the bears once, bears twice, trapping them in and buying into their stop losses. It may be something like this too, where it rolls over, the bears may come in. I'm not a big fan of that short, by the way, right? This is not going to be a short I would take here because we're at support below a trading range in a somewhat more a bullish environment. But if they do retest that low, this creates a double bottom. Same idea, okay? Same idea. Bears come in, trap them in. As you can see, I'm looking for bears get caught below 21 moving average and then buying back up, either with that either with that failure into pullback combination, which we talk about in the free trading course, or if it rips up, right, and goes higher, I want that bear trap, so I'm buying as low as I can. All right. So that's the general idea here for tomorrow. Now, obviously, I have no crystal ball. So now we have our game plan set, right? If it rips and runs higher, it's that bear trap and breakout pullback. If it drops, it's that crown reversal off the high. And it's simply trapping those bears in, right? Trying to use their stops as fuel. And it all depends on how deep that pullback is. All right, guys? Good plan there on the S&P. Let's go to the Nasdaq now. Okay, the Nasdaq is similar, but I think you'll find the Nasdaq is a little bit, well, quite a bit different, right? You'll notice right away, right? This chart looks very different here on the Nasdaq. Now, before I spoil the fun, let's go out of the 60-minute chart here on the NQ. Okay, in the 60-minute chart, the kind of the most important fact that you want to be aware of is, just like the S&P, the Nasdaq has that big strong run up, mid-June, around that Juneteenth holiday weekend. We've been waiting for this thing to kind of make its way back up to retest the high, because as you guys hear me saying over and over again this week, anytime we see a strong move in one direction, we expect a pullback and a retest. So we pretty much know where the market wants to go. And then, of course, you have the trading range. Okay, ranges, well, I love ranges. You should too. Ranges should become your best friend. They're very easy to trade once you learn how to trade them. Ranges love to rotate, okay? We mentioned this last night. Ranges love to rotate. So late, we've been rotating back and forth in that range. We're now trying to rotate off of that low, right? We call this rotation off the low. Now, oftentimes, these rotations off the low, they can really punch, okay? They can really squeeze and run higher. And when you put that in context with this strong up already, it would, like I said last night, it should not surprise anybody if we really squeeze and rip higher. The big variable right now is how many people are going to be here tomorrow with the holiday weekend. How will that news out of China, affect this market as well? There's a lot of variables, but these potentially could easily squeeze and really race higher. Now, we have to be a bit careful, because clearly this is not a bull market right now, right? It's more of a neutral market. We've got some definite clues for the buyers, but there's not a lot about this chart right now that says right now we are bullish, okay? So we're more neutral, so we can't go swinging for the fences on the bull side just yet, but we're anticipating, right, that rotation back higher here, and we'll see if we get it tomorrow, right? That's what the 60-minute chart tells us. Now, let's go back to our tick chart. Remember, everything is easier on a tick chart. That's why I like to use them in our trade room. These are NinjaTrader tick charts. Now, what's the most important factor right now on the tick chart on the Nasdaq? Well, if you look at this, you can see it's basically a bull market up, basically into one big trading range right there. Right? You can see it there. It's a little bit right there, but basically, right, it's basically one big bull run up. I know I'm simplifying this right now, but it's basically a bull run up into a trading range. Okay, the amount we went above the range rotates below the range. Remember, ranges love to rotate back and forth. And so what do you see now? Right, we're coming and we're trying to rotate off of that low. So pretty simple in that sense. I think there definitely are some buying opportunities going higher here, right, as we reverse off of that low, but we definitely can't bank on that yet. One thing about the Nasdaq is I could easily see, because we are kind of neutral right now, we're not that bullish, I could easily see this thing trying to go lower. Okay, and this is where I think we can get some great reversals off of that low, because if there's one thing you learn about in the free trading course, what is it? Whenever we have a bull market into a trading range, what's the best way to make money? Finding support levels below the trading range. Okay, if you understand that ranges act like magnets, and we have a bullish short-term directional bias into that trading range, it becomes very difficult to want to sell down here. Okay, and until we see some proof they can hold that breakdown and take the low out, and until we get there, right, I would love to get a reversal off of that low, right? I'd love to get some bear traps, some head fakes, some fake out breakouts off of that low. So be very careful if we do go lower here overnight, especially out of the news from China. I could easily see this area right below us here, right, because it's kind of a prior range breakout support level there. Anyways, okay, so that's kind of what I'm seeing here right now on the Nasdaq tick chart. So a lot of this will be quite similar to the S&P, but it will be a little bit different, right? A little bit different. So for example, we should be rotating higher. Okay, if we do rotate higher, what's the concern? Buying high, right? That's concern, right? We got major resistance up overhead. And what's the most useful pattern setup if you're worried about buying high? It's a trap, right? So as we go higher here, remember, strong move up, shallow pullback, higher high in price. So on the way up to taking out these highs, or if we were to really punch through these highs, it's a very simple entry pattern. It's a bear trap. Right? That will certainly be the pattern, the go-to pattern here as we go higher, because again, we're trying to avoid buying too high. Okay? That's the way you buy it, right, as it goes higher. Now, let's say, for example, let's say we do jump higher. We get that little, right, bear trap right there, right? And we start to really punch, okay, and go higher there. Now, oftentimes, these ranges will break out pullback, right? They'll break out and they'll pull back around those ranges, right? They're called breakout pullbacks, range breakout pullbacks. So in that scenario, if we can get a lot, remember, here's the key. We need to get a lot of momentum going higher, right? If I can get a lot of momentum going higher, nice strong move, anytime we see a strong move, we should be seeing a pullback and a retest. Okay, so we got to get that strong move. We can get that strong move now. Now we start marking up levels, right? We go, okay, that level was what was prior resistance, can be support, and we start looking for, right, trend line, finding channels, right? We start waiting for that deep pullback, get underneath the 21 moving average, right? Trap the bears in underneath the EMA, use stops as fuel. With a failure, grab the pullback, right? And we're gone from there. All right. So I like that sequence here for tomorrow. The one variable, the one kind of key difference between the Nasdaq and the S&P is we can look for bear traps on the way higher, but in order for me to buy these pullbacks right here, to buy that pullback, that failure into pullback combination, it needs to really give us some proof. We have to see some follow through. This thing really has to be kind of screaming and running higher. I need that momentum going higher in order for me to be able to ride that momentum on that pullback. Okay, and keep in mind, right, I can't predict everything, right? So I'll be finding channels. I'll be looking for prior swings here. You know, if it was to really rip, right, it was to really rip and run higher here tomorrow. If it really ripped and ran higher here, I'd begin using these areas as support. You know what I mean? So it all depends on kind of how far this thing, if it goes that far, and we just look for those bigger channels, right? Getting those deep pullbacks, right? Either that level or that level. And again, we're trying to grab, get below the moving average, failure, pull back, and go. Okay, so same dance we talked about on the S&P, but a little bit more emphasis right now on the Nasdaq to really push through those highs here. Now, a couple more things here too. If we go higher here, how do we sell the top? How do we sell something like this? We're pretty bullish in that scenario. I like the idea of the short, but this is exactly where, if I'm trying to go against that momentum, remember, these can really punch, right? They can really rip. These rotations off the low can really rip. Okay, so we're going to be careful fighting that momentum. But if the buyers struggle, they try once, they try twice. Remember, be careful here, right? We don't want to sell low on this because of those breakout pullbacks I mentioned before. This is exactly where a crown reversal pattern will be absolutely necessary, right, for a good short off the high. Another variation of this, just so you know, is sometimes there'll be so many bears up here, right? So many bears up there, it'll get whacked back down and begin to roll, right, and run lower. If that happens, where's the market want to go, right? If it gets whacked back down and begins to roll lower like that, it's going to want to take out these lows, right? It's going to want to rotate off the high and take out those lows now. So if that happens, what do? You don't chase it. No, you don't chase it. You don't sell low. You mark off that low. We mark off that high, and we start picking tops off and looking for that first test on that rotation back down again. Right? Makes sense? Okay? So again, either we go up in a crown reversal back down, okay, or it may get whacked and V-top, and if it does and grinds down like that, you wait for that first test off the high, and this could be a bull trap like I love. It could be a buyer failure pattern above the moving average. We oftentimes see these things, right? They'll pop, they'll grind down. We draw those channels, right? We get above some of these prior highs. It could be, right? It could be a trap. It could be a failure, right? To go back down, right? To retest the low. So think about these patterns, right? As we rotate off of that low, off of that high. Excuse me if I get my mouth to work here tonight. It's the end of the week. It's late in the week here. We had a busy week here this week. Okay. Now, the next thing is, I mentioned before, is if we go lower out the gate. Okay, if we go lower out the gate, be very careful down here, because again, it's a big range up here. Okay, big range up here, and there's a lot of support down here, down below us. Now, I like the idea. I don't like the idea of selling down here. Not with a range above me, not with support below me. This is not. I'm not looking for a short down there. It may happen, but again, we'll play them once we see it. If we get down there, what's the problem? The problem is momentum, right? That's the problem. The problem is we're very bearish at that point. Great level of support, great area to be a buyer, but I'm worried about momentum. So in these scenarios, all you do is let the sellers get roped in. Okay, I'm not going to try to pick a bottom on a deep pullback. Okay, when markets do this, when markets give you a deep pullback like this, you wait for a pullback to the 21, let them try once, you wait for a second try again. Once they try twice there, you know where their exits are, and there's money to make on that, right, on that failure. So same idea over here now, right? Strong move down. Bears come in. I'm not going to try to pick the bottom on this. Who knows how far it will go? But once we start seeing the bears come in and short once off the moving average, try twice off the moving average, now we know they got their grave dug for us, right? Now we know where their pain is, and we can use that failure into pullback combination, right? Failure pattern below the moving average, pullback off the 21. Or if it really rips off of that low, remember, don't chase those. Look for those traps below that low like that, right? So that kind of failure into trap or failure into pullback. A lot of times what we'll do is we'll go out and draw a trend line off the high like that, bring it down off that low, and oftentimes that little test off the low of that channel, little bear trap right there, that is a beautiful setup and almost a guaranteed winner when you're rotating back into that trading range. Remember the big thing right now is that range rotation, right? That's the thing. The range above us is the magnet. All right, guys. And as I mentioned earlier, right, they may run lower, they may retest that low and still 1, 2, back up as we go from there. All right. If all hell breaks loose, if the wheels fall off, if we roll lower, we hold the pullback, right, and we jump off of that moving average, well, now the race is on to go back and retest that big low, right? That big low. If they break, hold, and jump, the race is on back to that big low, and I will still look for a 1, 2 failure back up into that range above us. So be very careful, please. Watch yourself on those moves going lower, or do whatever you want, out there. This is simply my idea, my trade ideas here for tomorrow. By the way, what do you think? Right? What do you think? Are you enjoying these videos? I would love to hear from you down in the comments section. I'm always trying to make these better. So how can I improve? How can I make these more useful to you make money, for you to make money out of this information? I know it's not easy to predict the future, but hopefully this gives you a game plan you can use to make some moolah on Friday. Now, don't forget, I'm pretty good at this stuff by now. I've been doing it over 15 years now. But if I miss something tomorrow, I'm sure the market will throw some curveball at us at some point tomorrow. It always does. But that's why we have a trade room. We get together every morning 8 o'clock Eastern time. It's a great place to learn this stuff. It's a great place to trade this stuff right along with me. I have all the software templates, all the worksheets to qualify all the trades, and we'll have some fun together in the trade room as well. So I'll put all the membership links, all the free trading class links, I'll put all those down in the description of the YouTube video. If you got any questions or if you need help with any of this stuff, if you can't get access to the free course or whatever, just call the office or use live chat. We're always here. All right, we're always here, and we'll be here over the holiday break next week as well. All right, guys. Boy, thank you so much for being here this week. I know a lot of you guys are watching for the first couple times right now, so thank you so much for stopping by the channel. Make sure you subscribe, of course, and hit the like button if you guys enjoy this stuff, and don't forget that free trading course, because success is on the other side of that free video series. I have a lot of students doing really well with that short video series right now as well. So grab that link in the description, and we'll see you guys back here on Monday, July the 10th. If I don't see you guys tomorrow morning in the morning trade room, have a great rest of your week. Kick some butt tomorrow, make some money tomorrow, and don't spend all of it on fireworks over the holiday. All kidding aside, though, have a fantastic holiday break. I'm here if you need me, so keep in touch. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.